Good evening, everyone. My name is Leo, and I'm one of the foremost experts in the cryptocurrency space, with over a decade of experience analyzing blockchain technologies, regulatory shifts, and market dynamics. Today, we're diving into some truly groundbreaking developments that could reshape the future of digital assets. The title of this video says it all: Breaking the Fed. Just released an XRP bombshell. If you're part of the XRP community, or even if you're just dipping your toes into crypto, this is the moment you've been waiting for. Stick with me for the next 13 minutes as I break it down step by step with expert insights, data-driven analysis, and what this means for your portfolio. And if you find this valuable, hit that like button, subscribe for more in-depth crypto breakdowns, and share this with your network, because knowledge like this could be the edge that turns holders into winners. Let's start with the bombshell itself. Just hours ago, on September 4th, 2025, reports emerged confirming that the Federal Reserve is officially delving deep into discussions on stablecoins, tokenization, AI-driven payments, and the convergence of decentralized finance, or DeFi, with traditional systems. This isn't some peripheral chatter. This is the Fed acknowledging the inevitable shift toward tokenized assets and blockchain-based efficiencies. For years, XRP has been engineered precisely for this, bridging cross-border payments, reducing friction in global transactions, and enabling real-time settlement at a fraction of the cost of legacy systems like SWIFT. Think about it. XRP's ledger has been battle-tested for speed, scalability, and compliance, handling trillions in value without breaking a sweat. The Fed's agenda here is essentially catching up to what Ripple and XRP have been pioneering for over a decade. This is no coincidence. It's a validation that could unlock trillions in institutional capital flowing into the ecosystem. But why call this a bombshell? Because the timing couldn't be more perfect or explosive. We're on the cusp of a Federal Reserve interest rate cut, with market probabilities now sitting at an astounding 97.6% for a reduction at the upcoming September meeting. Historically, every time the Fed has initiated a rate-cutting cycle after tightening, risk assets like cryptocurrencies have surged, often by 300% or more within months. Remember the post-COVID era? Low rates fueled a crypto boom that minted millionaires overnight. Now, with inflation cooling and economic signals flashing green, this cut could inject fresh liquidity into markets, supercharging assets like XRP that are primed for adoption. Analysts are already projecting XRP could pump to $4 if this materializes, driven by increased speculation and inflows. And that's conservative. Some models suggest even higher targets, like $10 in the longer term, as tokenization captures just 10% of global GDP by 2030. Let me paint the picture clearly. The Fed isn't just talking, they're hosting a major conference on payments innovation scheduled for October 21st. This comes right on the heels of whispers about spot XRP ETFs gaining traction, with approval odds nearing 87% from regulatory bodies. Imagine billions pouring in from institutional investors. Estimates suggest $4 to $8 billion in initial inflows alone if ETFs launch by October. XRP's open interest in futures has skyrocketed to $1 billion in just 3 months, signaling unprecedented trader enthusiasm and liquidity. Whales are accumulating too. Holdings surged by 340 million tokens recently, pushing totals to 7.84 billion. This supply shock, combined with demand from tokenized real-world assets, sets the stage for a massive breakout. Now, let's zoom in on the technicals, because as an expert, I don't just hype, I analyze. XRP has risen an impressive 409% since September 2024, reclaiming its position as one of the top performers in crypto. Currently consolidating around $2.80, with strong support at $2.77 to $2.80, we're seeing a classic bull flag pattern forming. A breakout could target $1.70 short term, but with Fed catalysts, we're talking exponential growth. The XRP ledger itself is evolving. the Credentials Amendment activated today, enhancing infrastructure for real-world applications. Add in partnerships like SWIFT trialing XRP for $150 trillion in payments, and even capturing 1% of that market translates to enormous demand. Let's dive deeper into why XRP is uniquely positioned for this moment. The Federal Reserve's focus isn't just on stablecoins like USTD or USDC, it's on the broader implications of tokenization and DeFi. XRP, unlike many other cryptocurrencies, was designed from the ground up for institutional use. Its ledger processes transactions in 3 to 5 seconds at a cost of fractions of a cent, with a capacity for 1,500 transactions per second, scalable to Visa-level throughput with upgrades. Compare that to Bitcoin's 7 transactions per second or Ethereum's gas fee bottlenecks, and you see why Ripple's tech is a darling for banks and payment providers. Over 70% of the top 100 global financial institutions have already tested or integrated XRP for cross-border settlements, including giants like Santander and Standard Chartered. The Fed's conference will likely highlight these use cases, putting XRP front and center as the bridge between old money and new tech. But what about the regulatory angle? This is where things get really exciting. The Genius Act, signed into law in July 2025, has given stablecoins a clear framework, mandating one-to-one reserve backing with assets like US Treasuries. While XRP isn't a stablecoin, the Clarity Act has reclassified it as a commodity in secondary markets, removing the SEC's overhang that plagued Ripple for years. This dual-track regulation, stablecoins under banking oversight and XRP as a CFTC-regulated commodity, creates a perfect storm for adoption. Banks can now custody XRP without fear of regulatory blowback, and the Fed's own guidance in March 2025 explicitly allows this. We're seeing real-world impact. Bancolombia's CoPW stablecoin and banking circles EURI are already leveraging similar frameworks, but XRP's global reach and liquidity make it the superior choice for cross-border flows. Of course, no analysis is complete without addressing risks. September could bring volatility, macro headwinds persist, and if support breaks, we might see a dip to $2.50. But here's the key. Regulatory clarity is here. The SEC and CFTC have confirmed that spot crypto trading can proceed under existing laws, with stronger protections in place. Fed Chair Powell himself has signaled banks are free to service crypto assets like XRP. This isn't speculation, it's institutional green lighting. Countries like Japan are approving regulated crypto ATMs, and firms like Ondo Finance are tokenizing stocks on Ethereum. But XRP's cross-border prowess gives it an edge in global convergence. Now let's talk strategy. For the XRP community, this is your moment. If you're holding, you're sitting on a potential gold mine as institutional money floods in. If you're not, consider dollar cost averaging into dips. $2.50 to $2.70 is a strong entry zone based on technicals. Long-term holders should watch for ETF approvals, as they could trigger a supply squeeze. My personal portfolio? I've been accumulating XRP since the $2.20 level, and I'm not selling until we hit at least $5. The data backs this up. Stablecoin transaction volumes hit $5.7 trillion in Q1 2025, a 66% surge, and XRP's role in facilitating these flows is undeniable. The Fed's conference will only amplify this momentum as regulators and industry leaders align on a tokenized future. Looking ahead, this Fed bombshell is part of a larger, great reset in finance. The Fed's monopoly on payments is eroding as blockchain takes center stage. XRP, with its focus on utility over hype, stands to benefit immensely. We're talking about a paradigm shift where DeFi meets TradFi, and XRP acts as the bridge. If you've been holding through the dips, congratulations, you're positioned for what's next. And if you haven't, now's the time to consider accumulating. Remember, I bought the recent dip, and so should you if it aligns with your strategy. In conclusion, this Fed release isn't just news. It's a catalyst that could propel XRP to new heights, from $3 to $5 and beyond. The convergence of rate cuts, tokenization talks, ETF approvals, and whale activity creates a perfect storm for upside. The XRP community has waited patiently, and the payoff is imminent. Trillions are incoming, folks. Don't miss the boat. If this analysis resonated with you, smash that subscribe button for daily expert insights, like this video to help spread the word, and share it with fellow XRP holders. Let's build this community together. Comment below. Did you buy the dip? What's your price target for XRP? I'm Leo, signing off. Stay informed, stay invested, and I'll see you in the next video. Peace.